Hello and welcome to this week's Australian Stock Market Report. Now this week we're going to look at our big miners and whether now is the time to buy or expect further downside. Then we'll get into the Australian stock market so I can share with you my thoughts on where it's heading, along with answering your questions and looking at stocks for you. I'm Dale Gillham, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Now before we move on, thank you for showing your support for our channel and hitting that subscribe button. Now remember, as you subscribe, click the bell on the right of it so you keep up to date with our latest videos. Also remember to tune into our live Australian stock market show, which is on every Tuesday 7 to 8 p.m. Australian Eastern Time, because this is the show where you get to ask the stock market education and trading experts to look at your favourite stocks and answer all of your questions. Now in mid-July, iron ore was $228, but then China announced it was cutting steel output, and by the 22nd of September, iron ore fell by more than 50% to be trading just under $100. Now over the same period, Australia's big miners fell away, with BHP and RIO down around 30%, whilst Fortescue was down around 40%. Now given this, many investors are asking whether they should be buying the big miners right now. Now investors do like to chase a bargain, and when a good stock has fallen heavily, it can present a good opportunity to enter while it's undervalued. That said, investors tend to buy too early, only to find they've caught a falling knife as they watch the price of a cheap stock continue to fall. Given that the price of BHP, RIO and FMG are all affected by the iron ore price, the first question investors need to ask is whether the price of iron ore has stopped falling, which I believe it's not the case. Now the second question investors need to ask is whether the price of the stock has also stopped falling. Now unfortunately, many investors get this wrong because they look at how far the price has fallen compared to a few weeks or even a few months ago to determine if the stock is a bargain. Take RIO for example. It was $137 at the end of July, and last week it had fallen to $94, with some investors buying into the stock believing it was cheap, pushing the price up to around $100 last week. But has it stopped falling? Maybe, but we can't confirm this just yet. We're also yet to confirm if iron ore has stopped falling, and it is possible it could fall another 20% in the coming weeks and or months, which is likely to impact the share price of BHP, RIO and FMG further. That said, I believe we've already seen the price of these stocks fall 80 to 90% of what the total impact will end up being. Given this, while investors should start to get excited about the impending opportunity, it's still way too early to be buying these stocks. The time to take advantage of these lower prices will most likely be November, but this will only be confirmed when we know they've stopped falling. Now's the time to take a look at the market, and as usual, first up we look at what were the best and worst performing sectors last week. The best performing sectors included energy, which was up 5.05%. This was followed by utilities up 0.95% and consumer staples, that was up just 0.26%. The worst performing sectors included information technology, and that was down 6.22%, followed by healthcare down 5.83%, and materials, that was down 2.65%. The best performers in the ASX S&P Top 100 stocks included Orica, that was up 17.5% after brokers updated their target expectations for this stock. This was followed by A2 Milk up 9.44% and Woodside Petroleum up 7.13%. Now, the worst performing stocks included NextDC, and that was down 12.74%, followed by Afterpay down 10.06%, and Mineral Resources, that was down 10.04%. So what do I expect in the market moving forward? Well, let's get into charts for our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me. Well, if last week had you a little bit confused on our market, on its direction, you're probably not alone in that. Our market went up earlier on in the week, then fell away heavily, and then came back a little bit on Friday. But it was interesting, and it still hasn't changed my view on what's going on in our marketplace. But we are having a little bit of volatility at this point in time, and I don't think that is going to ease over the next 1 or 2 more weeks. And so let's go and have a look at the charts to see exactly what happened last week, and then I'll give you my thoughts on where I think we're heading over the next couple of weeks through to the end of the, probably end of October, maybe even to November. So let's go and have a look at the chart right now. On your screen, as normal, we've got a monthly chart on the left and the weekly chart on the right-hand side of the screen. Now, let's just have a quick look at the monthly, because you never should forget about the monthly chart, and I find this is one of the biggest sins that traders and investors do, because it's sort of like, if I can use the analogy like a bully in the play yard, it's generally the biggest person can be the bully, or is the bully, and dictates what's going on. And this is the monthly chart when it comes to the stock market. And you can see here, when you do look at the whole history of the stock market, some of the big moves down, like your GFC through here, and obviously your COVID low stick out, and over here is your 87 crash that we've had as well. But looking at the bigger picture, it just shows how the market is moving on. And if I just use a trend line tool, and just drew from here from the GFC low, you can see here the market really has been running up around this sort of momentum, and currently, if we look at the monthly chart, it's now breaking below this, and when it does break below this, you're going to see these dips through here. We had the COVID low, but it doesn't break by too much, and this is why I'm saying I don't think our market's going to crash at the moment. I think there's a whole range of reasons why I don't think our market can crash. One is because we had such a big fall down into this COVID low. If I go and remind you of how far that fall was from the high there to the bottom, I've just used the wrong tool, good on you. If I pick the right tool, that one, and I do there, you can see here it was 39.24%. That was a crash. The market just doesn't crash, a year or 2 years past another crash. And that's one of those interesting things that, we should all be aware of. But right now it is showing us its weakness. It is showing us that the market is going south a little bit, but how far south? But let's go down onto the weekly chart now. So always look at your monthly chart first and make sure you understand what's going on here. And you can see here momentum through here was quite steep, and then we actually really slowed down through from this period here from about October last year right through to today, and you can see here how the market is falling away. We've had, since the all-time high there in August, which is that mid-August high there, we've had 1, 2, 3, 4, 5, 6, 7 weeks where the market has generally fallen. We've got one green bar there where it's risen, but look at this: close lower, close higher, closed higher, close lower, close lower, close lower, close lower. So this is showing quite that the market is bearish, and I do think we're going to see more downside risk on our marketplace. I do think there's a lot more to go, and I have showed you in the past my target levels, but right now I'm still thinking 8 to 12% in that bracket. So if I go back to the all-time high there and I go to about 8%, which is around about there, which is about 7,200 odd points to go to, and then up to 15%, which is probably the absolute outside I think our market would go to. That would bring it down to around that 6,700, but I think somewhere up to about this sort of about 7,000 points I think would pull up our market if it goes through about 8%. So that's a pretty nice little band. So between where it is now and my worst case scenario, or what I'm thinking is worst case, is maybe another 6% fall from where it is currently. I don't think it's going to go that far. As I said, I think sort of around 7,200 will pull it up, and it will do so over the next couple of weeks. But I do need to be prepared as an investor or a trader that what will happen, and I can't just put my head in the sand and go, what's going on? I'm not really sure. And I know a lot of people get emotional, and they get a little bit more fearful of the market when it is falling away. I mean, everybody would love it all just to continually go up, wouldn't we? But that's not how markets work. There's a lot of buying and selling that does happen. Profit taking happens, adjusting of portfolios happens. There's a range of things that happen that cause markets to fall, because really the market is our perception. So the Australian All Ordinaries Index is a reflection of of us, basically, or our psychology, what we believe will be happening into the future. And fund managers are not immune to that. I mean, the fund managers, like myself, we have opinions of where we think the economy might be and how strong the markets might be and where opportunities might lie and what stocks might give us those opportunities into the future. So we adjust portfolios to suit that. And so we do cause the market to pull away or fall away. Now, when you're looking at the total market in terms of the All Ordinaries Index, around 70 to 80% of the value that's traded on the market is done by institutions, not by individuals. And so when the market is moving down, it's generally because the institution are actually exiting stocks and obviously really adjusting their portfolios, and that's what's going on. We're seeing that at the moment. We're seeing the market fall away. It has fallen reasonable amounts so far over those weeks that I mentioned on that weekly chart. I still think it's got further to go. I think we'll probably see the low in the next couple of weeks, but it could go out to the end of October or even into sort of mid-November. But I think we're probably going to wash out before the end of this month, hit our low and then start to move up again. As an investor, if you're more medium to longer term, then you're just going to ride this out and go, okay, well, the market's just falling away. Don't need to panic. And what you don't need to be doing is looking at all these inflammatory videos out there in media saying, stock market is going to crash. It's not going to crash. And I'm really, really confident it's not going to crash. Whilst there's a lot of clickbaity titles out there, which, we have to put up there so people can watch our videos. But again, just look at your portfolio. If you're medium to longer term, you don't really need to sell your stocks. If you're medium to longer term, you'll just sit there and know there's just a bit of a dip before it goes back to where it was before. If you're a short-term trader, you're probably out of your stocks already. And most of the stocks you might be trading, you'd probably be out of those already, and you'd be waiting for the bottom to happen and then jump in. But now's not the time, as I said earlier in my report, to catch falling knives. And there's so many people saying, can I buy this stock? It's fallen away, blah, blah, blah. And then they've bought into it. I mean, I know FMG's been one that, as it's fallen away, so many times people say to me, I want to buy FMG now, is it cheap? And it's kept falling away from that. And so let's now get into the questions that you have for me today. The first question we have today is from Charles, who says, hi Dale, what's your thoughts on NWH at the moment? Let's go and have a look at the chart of NWH and see what I can help Charles with. Now, I don't know whether he owns it or he doesn't own it. It's called NRW Holdings with the stock ticker code NWH, as you see up there. So let's have a quick look at the monthly tick, and I've just done what I shouldn't have done. Let me just bring that up again here on my thing. Okay, so here's NWH. Let's bring up, instead of closing it down, let's opening up. Let's have a really good look at this stock and the big history of this stock. It's quite a volatile stock, as you can see. It's had its all-time low right down there in 2016. It was down there in 2008 as well. And this big low here, obviously, is the COVID low that it's had. It's quite volatile. Right now, it just looks bearish to me. It really does. And this is the thing. It's this is not a buy and hold stock, as you can see there. You could have bought in 2007, 2008, what you could have bought only a number of months ago. And obviously, if we look down here, it's cheaper than what it was when it first listed on the stock exchange through there. Right now, what I would be worried about in terms of what's happening here, you can see a tiny little sign of a little glimmer of hope there, but I don't necessarily want to give you a glimmer of hope. If you don't own this stock right now, then there's no way known I'd be looking at my money being in this stock at what I'm seeing here on the monthly chart. If you do own it, then you need to make sure you've got a stop loss on it. So let's open up this weekly chart here, and you can see here how the last 1, 2, 3, 4, 5, 6 weeks the stock has fallen away, and I would suspect that you've probably got it and you're thinking, oh, it's down 23%, and that's why I'm saying it's quite volatile. It's multiples of what the All Ordinaries is. The All Ordinaries is down just over 5 or 6%, roughly around that sort of in the same period of time, and this is 4 to 5 times what the All Ordinaries index is down. Right now it is looking bearish. It looks like it may go through that more recent low down there. If it broke through that, then it's got a lot more downside risk to have. But again, if you're not owning this stock, then again, it's not one I would be in. If you do own it, you really should have exited by now. In my view, you should have exited by now, because there's no reason to own this stock at this point in time. But thank you for asking the question, and hopefully that has helped you out a little bit. I mean, obviously it gets down to your view, as I said earlier. Do you have a long-term view, a short-term view? On the fundamentals of this stock, have you looked at those? What is the prospect for the next 1 to 2 years? If you're short-term trading this stock, then the only way to trade this one right now is down, not necessarily up. And if you do own it and you're long term and you like the fundamentals, then hey, you might want to keep it in your portfolio. But I would suspect it's probably got a lot more to fall. If it's already fallen over 20% already, I think that at the moment the risk of holding it is a lot higher than the risk of exiting at this point in time and coming back in later if you do like the stock. The next question that we have is from Matthias, who says, hi, do you think it's a good time to buy Rio Tinto and BHP stocks? I thought I'd cover this question, even though I sort of covered it I did cover it in the first part of my report there. I talked about all the mining stocks, BHP, Rio and FMG, but I'm going to bring up Rio and BHP just to show you their charts at the moment, and the answer is you already know, is no. So let's bring up Rio at the moment, and you can see these charts here. Look at this, big moves down on both Rio and BHP, and I'll show you BHP in a second, but if you look here from the all-time high there, you can see there was 32% fall on Rio. It's all sea of red, and it is. You would be buying a stock on hope not on good analysis. Now, are these great stocks? Absolutely. If you've got a long-term view on these stocks, and there's 32%, obviously, shouldn't have done that one. If you've got a good long-term view of these stocks, then there's no reason why you can't be buying them. You're just buying them too early, and this is what a lot of investors do. They tend to buy stocks way, way too early. But if you can see there, it's really only coming back to, if I'd use my trendline tool, you can see here from that low in 2016, it's really just come back to that sort of line there. At the moment, it's a little bit bearish. It's got further to go. And as I said in my report, I think this fall of 32% down to here is about 80, maybe even 90% of what it will actually fall over the whole period. Now, let's have a quick look at BHP. And you can see the same thing here. Very, very bearish. Very bearish through right there on both the weekly and the monthly charts. There's no real sign of these stocks stopping falling. You can see there's 34% that BHP has fallen. I think they're going to go a little bit further. I think they'll get into the sort of between the $30 and $32 mark. I think they'll probably find some support there. But it's really dangerous me saying that sort of stuff is because people go, Dale, you said it's going to go to 30, or you said it's going to go to 32, and I'll buy it when it hits 32. That is not what I'm saying. I'm saying I think it's got further downside. And if you've watched these videos often enough, you'll know that I always say buy on confirmation, not speculation. That's why when people say to me, how far do you think this stock is going to run to? I don't necessarily care. Do I know a high degree of probability where it might run to? Yeah, I do if I do the work on it, but it doesn't mean I'm going to exit as soon as it gets to that point. The same as I'm not going to buy a stock when it falls to a level that I think it might fall to. I always wait, and I'll say that always wait for a stock to stop falling, start rising, and confirming it's rising before I get into it. I'm not trying to pick the bottom price and get in. Like I said, if I think this stock's going to fall to $30, and I say to you, hey, it's going to fall to $30, and it hits $30, I know people will go out there and buy it just because that's what we said. Dale said $30, but it could go to $20, couldn't it? I might get more information coming out between now and then, and it falls even heavier. China might come out with some more announcements. 4, 5, 6 months ago, we were talking about BHP and RIO and FMG. There's much more upside on those stocks, and you could do really, really well out of them. But then China came out and announced what it was doing, and then that affected the iron ore prices, which affected BHP, RIO, and FMG. So you really don't know. You can't know what's going to be announced next week, tomorrow, next month. All you can do is base your decisions on what you know right now and can confirm. And right now, what I can confirm about BHP, RIO and FMG is they're all falling. And that means stay out of them. And that really does mean stay out of them until a time when they stop falling away. And when they stop falling away, you'll know about it if you keep watching this channel. Janine and I love these stocks. And when they stop falling, we'll be letting you know when they start to rise and when it's safe to get into them. And that's why I find so many people struggle with their portfolios is they jump into stocks too early and affect their portfolio returns. Anyway, let's move on to the next one. This one is from Transcendent, who says, hi, Dale, thoughts on Incitec Pivot Limited. It's coming up to a strong $3 resistance level. I've held a position since April 2020. I'm interested in your thoughts on the chart pattern. Is the steam on the rise up or slowing down? Cheers. So let's go and have a look at Incitec Pivot. I'll just bring it up on the screen, and you can see here Incitec Pivot. It's beautifully moving up right now. And look, I understand your question, and yes, there's a resistance, and this is one of those things, oversimplifying it. I can put support and resistance lines on all of this stock all over the place, and then people do. You can draw lines across, roughly there, and you can put more and more lines on it, and people go, okay, there's a resistance or support line there, and people put lines all over their charts, but it doesn't mean the stock will find support or resistance there. They're fairly simplistic, support and resistance. Are they important? Yes, but there are more other things that are far more important. I don't get out of a stock because it's getting near resistance. Obviously, last week it hit $3.01. It's still looking all right. It's moving up. The previous high there was $2.98, as you can see. It's the view is whilst it's rising, you stay with it, and if it starts to fall, you get out of it, and you have rules around that. So right now this thing does look good. It looks quite nice and strong. And thinking if you just use some basic trend lines, which I teach in my book, you'd be having one that's along there. And right now we can't get one up there, but I would actually be doing one up there if I got a chance. But right now it's not. This is not a proper trend line I've drawn. So if it's any one of our students, I haven't drawn it properly yet. But right now it's looking good. I think it's stay with stocks that are moving up and just have a stop loss on it so that you know that if it does start to fall away, that you have a line in the sand, but right now it is looking good. Stay with it. And as the old saying goes, let profits run, cut losses short. So just do that. The next question we have is from Senpai58, who says, "Hi Dale, interesting hearing about exiting stocks. I think the market has been hot for a while now, and history shows that after all-time highs, there is usually a crash, though no one can predict when it will happen. Do you think if stocks are held at all-time highs or all-time highs for the year, should it be time to take profits and run?" Absolutely, positively not. I do understand the statement, and it just makes sense. If a market's in an all-time high, it will crash. But if you go back and look at the All Ordinaries Index, if I bring that up on a chart, and I'll show you what I mean here, and I'll just bring it up on this workbook that I've got. Let's bring up, and I'll just show you. Come on, open up. There you go. Looking at this on a monthly chart, if I go back to here. From this point in time, this is the 2003 low we had a pullback there. So from about this point here in March 2004, all the way through to November 2007. So that's 2.5 years the market was making brand new all-time highs all the way through, and then it eventually crashed. So is the market, if that's our previous all-time high, and our market has only been making new highs since, where is it? There we go, January 2020, we've made some new all-time highs, and we've had a crash here. Do you think our market's going to crash? And the answer is no. That's part of the reason. Because markets will make all-time highs and continue to make all-time highs. And I can bring up hundreds of stocks like CSL and Cochlear and Wesfarmers and who've been making all-time highs for years, and they won't crash. So it's about having a look at what's going on, not necessarily because something is an all-time high. So just because a stock that you own hit an all-time high is absolutely zero reason to sell the stock. Always let profits run, cut losses short. So if you own a stock and it's rising, you stay with it until you have a signal to get out of it, which means, and the signal to get out of it means the risk of holding it is too high, which means is why you have trailing stop losses. For example, the trend line that I talk about a little bit, and I talk about in my book, and we teach our students. But there are a lot of tools and skills that you can use and strategies that you can use to make sure you eke out all those profits. It's not just about selling because it hits an all-time high. So, and I don't necessarily think you meant that, but to me, a stock and it's an all-time high is a great time to buy them. If something is an all-time high, because you know it's moving up and you know it's got through those resistance levels and you know it is in a bullish phase. So therefore, why not buy and stay with it? So to me, it's the opposite of what you're thinking. But thank you for asking the question, and thanks to everyone for your questions this week. And if you're sitting there thinking, I've got a question I need to ask Dale, then please, we're happy to answer that for you. So if you'd like me to answer your questions, remember, you need to publicly subscribe to the channel. Now, I say publicly subscribe to the channel because that's the only way I know you're a subscriber, and publicly subscribe means next to your name, there's a little red circle with a symbol in it that you're telling other people that you subscribe to a channel. And I pretty much guarantee that if you're doing that and you put a question in, you'll get answered, because quite often there's too many questions for me to answer that. So that's how I filter them. People but publicly subscribe first, and then I look at other people that have great questions that I think we can do, but I can't sit here and answer 20 questions. It's just not possible. I don't have the time for that, but I am happy to answer your questions. All you need to do is subscribe and put them in the comments section. I'll get to them next week. Now remember, on this channel we do these Monday reports every single week. We also do our live stream, which is on Tuesday nights 7 to 8 p.m. So I look forward to seeing you on our live stream. You can give us a call in the live stream. You just call the number 92909988. You can get to talk to Janine and myself live on the show if you're there from 7 o'clock. So hope to see you there tomorrow night. Remember, hit the subscribe button now, click the bell on the right of it so you know when we upload and go live. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.